It's not about picking stocks. It's about picking the right portfolio. 82% of stocks were down, and the average decline was 1.6%. So again, our energy longs were up, our uranium longs were up. That was a good day for us. It was a very good alpha day because, again, we got the dollar right. I've said this many, many times going back 15 years, but I said if you can get one thing right, get the US dollar right. Quite literally, the non-farm payroll number comes out. The 10-year yield goes to 4.05. Then I was like, ooh, now it's at 4.08. Then it was up to 4.10. Then it closed the day, I think, higher than that. Now it's at 4.27. That's one of the biggest two-day moves in bond market history off that kind of a setup. So again, an absolute crushing of the macro tourists, and I'm not going to apologize for this. First part of July, I was getting crushed, but now look at who's getting crushed. I mean, this is back in July the 17th. This morning, I highlighted in the early look when Bloomberg, and I quote, their number one headline was that the dollar's busted bull run has bears saying the end of an era. Now it's at a 6-month high. So what is the value in what these people do, these macro tourists? The media, the tweets, all of it perpetuates this short-termism and macro-tourism that we can profit from. So again, we didn't just profit on it from being long dollars and not chasing TLT or long-term duration. We added it to the next piece here this morning, which is our sector styles, okay? We shorted utilities, we shorted REITs, we got rid of our housing long before all that happened yesterday, okay? And we were long energy. So that's called alpha. And I mean, quarter to date, you know, I'm a big cycle to date person. That's all I really care about. But quarter to date really matters because that's the only duration that I am accountable to in being long of inflation and energy, because we didn't add that until the third quarter. So again, all that really matters to me and should matter to you is when you put the positions on. We did a wonderful job going all the way back to the lows of inflation and the lows of commodities for that matter in Q2 of 2020 of getting long commodities as an asset class for 2 years, getting you out at the peak of the cycle, which was last year, and getting you back in July. So I don't have to sit here and lament over being a SPY monkey or a Q monkey for that matter. We got a lot to do. We have a go anywhere strategy. It's long and it's short. And quarter to date, look at that split one more time. XLE, which is energy, is up 13% or 12.8 versus Utes down 6. Those are absolute returns, Jonesy. That's one of the best setups that I've had in years, and I'm not going to apologize for that. What are you doing with all that money that you've worked so hard for you and your family, and what's the next decision? What's the next high probability decision that you can make? And we thought that, you know, a month and a half ago that was getting long of inflation. We're going to stay with that until the signal tells us not to, and I'm happy with that.
All right, we're going to wrap
there,
up.
Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.